Property development is known as a rich person's game. You need money to make money, they say. On this session with Jo Natoli, who's also a Sydney property manager, she tells us about how she was doing a $30 million plus development deal and how she's made millions from property developing and the lessons, because this wasn't necessarily a smell of roses story. This is one of those ones where you may not necessarily expect the ending as to how it went. She did some successful projects throughout her time, and she was able to walk us through how she executed those deals and then progressively built her way up to that $30 million project, which culminated and finished around sort of 15 years ago. So that may tell you some of the story. And from there, she shares the lessons, the insights, where she went wrong, where she would do things differently. And she was not simply doing your average duplex. She talks about some of those lessons for the newer developers that they can take on. This was an amazing, all-encompassing session where she also unpacked what's going on in the Sydney property market as well, because she's an expert in that space in the property management game. This is an amazing session, a very raw and authentic journey, investor story, one of those ones that you just think, wow, these are the kind of things that I want to hear more of. It's an amazing session. We're lucky to have Steve Polizzi as a special guest co-host. Got to tune in. Hey everybody, I'm Jeff Miles, and together with Jo Tucker, we created Australia's largest property Facebook investment community with now over 85,000 property investors. And each week we get to interview the top property investment experts and share their stories along the way. This week is no different. We have Jo Natoli from The Rental Specialist sharing her developing story, along with the special guest co-host, Steve Polizzi. Everybody, let's jump in. Welcome to Oz Property Investor. We bring the big names and we have the big fun. That's what I'm going to say. Yeah, it is a huge session tonight. We're talking about is Sydney still king for a start? We're going to address that question to some extent. So I've sort of taken a bit of poetic license there because it's a running joke with Mick Kaz. He loves that. But we're going to talk about developing and the trials and tribulations, because it is, I suppose, can be a challenging sector. And Jo's had an amazing lived experience in that and come along to share with us. So first of all, Jo, how are you going?
Excellent. Thank you. Excited to be here.
No, it is exciting. No, this all started from back in a conversation at Ricky Chew's where your son was there. He's like, Seb said, look, we've got to get you on the podcast, and it's taken me too long to get to it. So apologies for that. Hope you're watching tonight, Seb. Big shout out to you. And Steve, how you going? What's happening, mate? How you feeling?
I'm good. Just trying to survive until baby comes next week. So I'll be back on dad duties for next Tuesday or Wednesday or so.
Yeah. Wow. That's exciting. It is.
Is it, Jeff? Is it?
Yes, very much so. I can vouch for that. No, it'll be fun. It'll be challenging. It'll be scary. It'll be interesting. It'll be frustrating. All the emotions rolled into one, and that's just in the first couple of hours. And after that,
just like managing OzProp.
Yeah, exactly. It's pretty much like a regular Tuesday morning. So before we go into introducing our amazing guests tonight, I just want to say we cover this off at the beginning and then we don't need to cover it again. Information is general in nature, not taking into account your personal needs or objectives. Go and speak to your financial advisors, your accountants, and your trusted professionals. Particularly, I suppose this is pertinent for your developing at the moment, because I think it's important you have the right professionals, and we'll talk to a little bit of that on this session as well. But Jo, you are an amazing property manager, and I think I was reading somewhere in the lead up to this, you're one of the first property investment focused property managers in Sydney back in '97. Is that how did I?
The first in New South Wales in 1997. I set the rental specialists up. So yeah.
Yeah,
thank you. The first that I'm aware of. Yeah.
Yeah, I mean that was a few years ago, but I was still kicking around. I wasn't buying property then, but no. So you are a licensed real estate agent and also a business broker, which I found yes. There's many bows to your string. You've been founded the independent property management since 1997, running it successfully since. Look, you've got all sorts of educating property managers, and you also sit on the board, and you're the deputy president of the Real Estate Institute of New South Wales, the REINSW, and you speak at you sit on the property management and the strata chapters of the Real Estate Institute. Is that of Australia?
No, New South Wales.
Okay, REI. Okay, yeah. But no, so you have an absolute wealth of experience, and I want to dive in. Steve, do you want to ask the first question though? What do you want to ask of Jo?
I was going to ask the premise of starting the rental specialist. Like, was that just because you were angry at current property managers, or you're invested? We'll get into your story, but you're an investor yourself, with basically thinking I can do better here. Like, what was the premise of that?
Yeah, I landed in the real estate industry by accident when I was 17, and I worked in a few agencies and just thought that I could do property management a bit better. I landed as a receptionist and just stayed in that property management. I established really quickly that I wanted to stay in property management and make a career out of it. And yeah, I decided in '97 to just go out and go it alone and see what happens.
That would have been pretty scary.
Yeah, it was. It was very scary, actually. My father said, "Why do you want to kill yourself? Go and get a job and just earn you $600 a week like everyone else." So I went, "Nah, it's not for me. Sorry."
Where does the back at that point in time, because there's obviously like no buyers agents and where do you start grafting for clients effectively, which are
Oh my goodness. I did not have to do a thing, because people, as soon as I went into my shop front in Brighton Le Sands, people just came to me. I didn't do a skerrick of marketing because it was new, it was different. People liked that they were dealing with a specialist, and I did not do any marketing at all.
Wow. That's I love that sort of and I suppose you are knowing you, sort of seeing you operate and seeing you answer questions, you have that expertise, and you're very thorough. So I'm sure you would have been very well received in the sort of Sydney market. And to give us a bit of flavour for where you sort of manage, so people can, and we'll talk to some of your patch as well.
Can I ask a quick question first, Joe? Have you seen any changes since that, the way property management is now versus the people walking in? Is it now just all online and they check your realestate.com rating? Like, what's the difference you've seen now over that shift of 28 years?
That's a good question.
The shift in managing property? How
the clients find you? Because obviously, like on this, everyone who follows this group, most people have a property and are an investor. Like, if you're like me, like, you generally just look at the area, you look at the property managers' ratings, you get a feel for how they operate. Like, but back then they're walking in your door. So now is it more online competence, or like how do you find people choose a property manager now?
Most of my business comes through direct referrals. So word of mouth is very, very big. I actually get a lot of referrals from other agents around the country, and from agents that don't do particular areas that they know I do. But a lot of it is online. So I do have a bit of an online presence. I do make sure that I'm educating my audience very thoroughly, very well. And that just leads to trust, which then obviously leads to people reaching out. I do some other business development things, but the majority of it is referrals and an online presence. But gone are the days where landlords know these days, or they're becoming more savvy, and they know that you don't need to hire the agent that's on the next corner down the road in order to get a really good service. So things have changed.
I sold a property last year, and the agent's like, "Oh, come into our office," and I was like, "No, just tell me what you want from me, and I'll sign the documents."
Yeah.
Wasn't the property in Queensland? Oh, is that the one up in Western Sydney?
No, this one was actually in New South Wales. So I was actually in Sydney, in Western Sydney.
There you go. It's interesting to I see where Steve was getting with that, because like the buyers, buyers just weren't. They were only just probably starting late 90s, early 2000s. But the mortgage broking, or even the borrowing space, for example, 30 years ago, or not 30 years ago, but nearly 30 years ago, you would have literally gone to your branch manager, and he would have got you a cup of tea, maybe some of those Arnott's biscuits if they're around, and he would have said, "Tell me about what you want to do." And he would have had that, or he or she, because yes, there were. My mum was actually a bank before I was around, and I'm not a bank manager, but a lending manager, and some of the stuff she'd tell me, it's like, you get your little calculator or whatever it is, but no. So Joe, tell me about your patch. Like, what is your focus areas of Sydney, and that'll give us context, and that'll go into developing as well.
So I manage property across the whole Sydney metropolitan area. I have a sizable portfolio in Penrith, but I manage properties all the way up to Pymble. And but so I've got a really good chunk of a portfolio in Penrith, and the majority of it is sitting around the inner west and eastern suburbs, with a few scattered around in other suburbs as well.
Yeah, there you go. So you got a bit of a broad spectrum around Sydney.
I do.
And
yeah, there's a couple of areas I don't go into, but yeah, mostly it's the whole of Sydney.
Can I ask why, and in which areas, or is there a reason?
Oh, I don't want to annoy anybody. That's a really loaded question.
Do it, Joe. Do it.
No.
No, I better not.
It's those bloody houses at Mount Druitt, isn't it?
Well, actually, I do manage properties out in the Blacktown area. I have a couple in my portfolio, but there are some suburbs in the southwest of Sydney that I just won't. I won't. Yeah. I refer them to others people.
Oh yeah, I think I might know who you're referring to as well. But anyway, so tell us about what are you seeing in terms of the trends? Like what's going on the grounds? We don't need to get into rental yields because you can look that up on realestate.com and all the data platforms. But tell us what's going on, Joe. What's the on the ground truth in Sydney?
Interestingly, everybody keeps talking about a rental shortage, but the data from Rental Bonds Online shows us that in the last 12 months, we've had an increase of about 10,000 properties onto the rental market, just by judging how many rental bonds are being held by Rental Bonds Online. So in November last year, there was around about 970 odd thousand bonds, and November 2025, the official number of bonds being held by RBO was 983,020. We don't have December's data because they were actually closed for December, so they didn't keep any records. So, but we'll know January's in a couple of days. But yeah, so rental supply has actually gone up, which is really interesting.
Is that in Sydney or New South Wales?
No, that's New South Wales. Yeah, that's whole of New South Wales. But in Sydney specifically, what we've seen is rents go up. Cotality says that rents have gone up about 5.6% in the last 6 months. I'm on the ground, I can see that rents are going up. There's not that aggressiveness to the rental market and increases to rents that we saw even 18 months ago. So the aggressiveness in those rental movements is gone, I think. But also so has the frenzy in, or the desperation rather, from tenants in trying to secure rental property. We're not seeing lines of 20 and 30 people walking, trying to get into a property. And I have to say respectfully that if we are seeing that, then the property's not priced correctly, in all honesty, in my view. Pardon me. But what we are seeing is rental properties are good, providing they're priced correctly. Rental properties are sitting on the market for 2 weeks, not too much longer than that. So they're renting really well. They're renting quickly. They're renting to good quality tenants. I have a few properties that have gone up quite substantially in their vacancy period. I've got one property in Rosebery. It was a funky one-bedroom apartment. Sorry, no, it wasn't one bedroom. It was a two-bedroom apartment, and it went up about $10,000 a year, so $200 a week. But that's the biggest increase I've seen. Wow. Yeah. Oh, it's a beautiful apartment. It's well worth it. Absolutely stunning. It's a warehouse conversion, historic building. Absolutely fantastic.
Didn't tell me about it, Joe. We could have moved. It could have been Rosebery. It just sounds like my kind of hood.
That's great. Yeah. But so yeah, that went up there was a $10,000 difference between the last tenant and the new tenant. I have another one at Kingswood. Actually, I had a house in Kingswood, and it went up by about $4,000 between the last tenant and the new tenant, just in the last few months. So 510 a week up to 580. That's just a bog standard 3-bedroom little cottage on a busy but not so busy, not highway, but busy road.
I I know Kingswood very well, Joe. So if it's anywhere near the Bolo, like the Santley Crescent, but yeah, no. So that's, I mean, anyway, local knowledge, but yeah, there's some interesting sort of characters, and that's fine. Great, that's good to hear.
Yeah. So, anecdotally, do you see any difference in demand for types of properties or price ranges? Like, is it like the upper end takes longer, or you find like the one bedrooms take longer, or is it just very case by case where the property is, how well furnished it is, or whatever it is?
Yeah, it is. It very much is case by case, and tenants are discerning these days, which is a good thing. They are holding landlords to a particular standard, because I think that we all want a good rental market that offers good quality properties. So that's fantastic. But I'll tell you what moves really well, and I just can't get enough of them, is granny flats in the western suburbs. They just fly off. When there's a granny flat available, it just goes so fast.
Is that young couples? Just like they want their own place, just can't afford a house? Yeah.
Yes, typically, yeah. They're small, they're compact, they're easy to maintain, and they're well priced. I mean, a good granny flat in the Penrith LGA I've seen some as cheap as $450, but the most expensive I've seen is about $560, $570, but typically around about the $550 mark.
Okay.
Yeah. Wow, that's crazy. Like, just rental. I remember being able to rent a whole house in a not a bad pocket of same area for $450 in 2016, and now you get a granny flat for $530 or $5.
Property prices are double though, Jeff.
Yeah, geez. Interesting times. I know that's 10 years, but yeah. Anyway, so Joe, we could have a whole session about your insights on Sydney, but before we get into your property developing story, which you and I had a good chat about that on Friday, tell us, what are the challenges for New South Wales landlords? What are the things that are changed, and what do we need to be thinking about when renting a property or being a landlord in New South Wales?
Fantastic question, and there's a multitude of answers to that, actually. So what's changed? Well, I think everybody, unless you've been living under a rock, everybody knows that we've had major legislative changes back in May, and that got a lot of landlords really, really worried. But honestly, it was much ado about nothing, and it's largely business as usual. Landlords have lost some rights, or they've lost some rights isn't the word, but there's been some parameters put in place in terms of how a tenancy is treated, and the protections of the tenancy in situ. So there's been some changes in the laws around that, but it is largely business as usual. What are we seeing in the future? Well, we're seeing, from a legislative point of view, we're going to be seeing some changes around privacy. We're going to be seeing some changes around standard application forms, and more restrictions around gathering identity and holding identification material. Yep. And we're also going to see the implementation of the portable bond scheme at some point in the future. They were hoping to bring it in by now, but I think we will see that towards the end of this year. But nobody should be worried about that. It should hopefully be easier for tenants to move from one place to another. And apparently the government's going to be underpinning it. So, yeah.
What could go wrong?
Exactly. What could go wrong? It'll be very interesting. But I mean, people freak out about it, but people need to remember that before the electronic times that we're in now, there was also a portable bond scheme in terms of a paper form that real estate agents would fill out to authorise a transfer of bond from one property to another, and other agents were quite happy to rely on that. So a portable bond scheme has been in existence before, but people just forget about that.
Yeah. All right. So investors don't need to be worried.
No.
I like that.
No.
You've given. Oh, you go.
I was going to say, but it's really important now. Investors don't need to be worried. They still need to be very, very careful about who they choose as a tenant and make sure that checks are really thoroughly done, because now it's so much more difficult to get rid of or to move a problematic tenant on, it's much more difficult. And they do need to really ensure that they've got very, very good property management solution who is managing their interests properly and professionally.
Before we talk about development, the last question, because I know that this was bandied about a little bit, and I think it may not have. I haven't followed it too. I haven't had to worry about too much New South Wales. No cause evictions. Did that end up sort of coming into New South Wales, or how did that eventuate?
Look, that is a bone of contention, particularly for me. What we have now in New South Wales is a situation where we have a legally binding contract with no ending date, and that's a problem. So now we have leases, and we used to be able to terminate a tenancy and seek vacant possession simply because the fixed term contract is coming to an end. That has now been removed. So and we also used to be able to move a tenant on and take vacant possession by giving a no grounds notice, which was 90 days notice. That has also been removed. So now if we need to terminate a tenancy, we need to have very, very specific reasons as to why the tenancy is being terminated. And we also need to provide very specific supporting documentation to prop up the reason of the termination.
Yeah, I thought that might have been implemented, but I wasn't.
That came in May. Yeah,
I get lost in all that's going on in Victoria. So now that we've gone on that whirlwind tour of New South Wales and Sydney I want to know what got you started in property developing. How did that all get, and when did it start? Or Steve, should we start somewhere else on the developing journey?
No, I would say just investing. What got you into the first investment property, and then how did that flow on to developing, if development was the first or not?
So no, developing wasn't my first. I purchased my first property in partnership with my father when I was 18 years old. I developed an interest in property generally when I was in my early high school years. We moved from one part of a suburb to another because we needed to change school zones, and my father purchased a block of land that he could later develop and put some townhouses on. So I got really interested then because I was watching him design the townhouses that he would eventually build. So I used to go to council meetings with him and started twigging. I started asking him really impertinent questions about how do you make money if you're paying interest on the other end? And, so a whole education process started when I was about 13 years old. And when I was 18, I just said, look, I'd be interested in buying a property, give me a hand. And we went partnership in a house in good old Dapto. And he still owns that today.
I bet you wish you did as well. I bet you wish you did own it, Jo, because it's
kind of do.
It's gone crazy.
Yeah, I kind of do because it's gone crazy. My sister owns a property down there as well. I know just how much it's gone up. But he's now developed it, put a granny flat in the back, and renovated the front house, and done all of those things that we had originally intended to do. So that was my first investment foray.
Can I just I just want to ask, and maybe a little bit selfishly, where did you garner the interest to start going to council meetings at 13 and start asking questions like, how do you make money after?
More importantly, Jo, what was it like not having friends at that age?
Oh my God. Oh, nobody knew that I was into that. But I was a bit of a nerd, right? I used to cut out house plans and collect these house plans. I had a whole folder full of house plans because one day I was going to be designing my dream home or some shit like that. I don't know. I just had this interest. I don't know.
Generally cool. You loved property, like even from a design point of view, which is probably where the love came from.
Yeah.
Yeah, and so you bought that first, or when partnered in that property in Dapto, and then how did it then sort of go from there? I think I know where it went from here, but did you then go up to, was it Hurstville next, or what happened next after that?
So I did that when I was 18, and I set up the rental specialist when I was 22. That was 97.
Yep.
And am I allowed to ask commercial questions?
Sorry, say that again.
I was going to say, can I ask some commercial? I get told I'm not allowed to talk about commercial property, but how'd you go on leasing your first location as a 23-year-old? Like, did you just see the spot and be like, I like that spot. That's a good spot.
I wanted to stay in the St. George area in Sydney because I was living there at the time, and I really liked this area called Brighton Le Sands, and it was almost fate, honestly. I had set my business up. I was actually working out of my living room. And people thought it was like I was speaking Martian language, because I'd say to people, oh yeah, I work from home. And people would look at me like I had rocks in my head. So I came to the realization really quickly that I needed a shop front. I just found this little shop front in a bank of shops, in a really old, one of Meriton's original developments down there. And it was just perfect. The price was cheap. I had met my now husband then. He's a builder, so he renovated it for me for nothing. And but yeah, look, I knew the agent when I was doing my license course at TAFE, so there was no issues there getting the lease. But I was there for donkey's years. Yeah, it was great.
The premise of the question was more like, I know how bad it can go if you get the wrong retail space. Like if you, because you said you got foot traffic in, so I was like, oh, if you chose the wrong one on the wrong corner or perpendicular main street, like completely different business.
Oh, I agree with you 1,000,000%. And I procrastinated for a very long time before I actually jumped in and went, right, it's either now or never. It was someone had to push me, and they did. And thankfully they did. Because I was struck with a bit of analysis paralysis, and what if this goes wrong and what if that goes wrong. But yeah, it was good. I just needed some reassurance. Being so young.
I was going to say that's really brave. You should be really proud at that age making such a huge commitment.
Yeah, thank you.
Yeah, 30 years ago. Geez, that's. I mean, it's concerning that I actually remember what was going on in when I was at that age. I don't want to share my age because it'll make everybody. But no, so you started off the rental specialist, and then how did you catch the development bug? Like you had a little bit of an interest in it when you were younger. And then what happened next?
I always knew I wanted to get into development. I just did not know how I was going to do it. And look, I met my now husband in the year 2000, and he was already developing. I met him at a development site that he had just completed. Wow. And I just kind of picked his brain about numbers and how it all works, and he really spent some time educating me, which was great. And in 2003, I got to a point in the rental specialist. Don't forget, I had no support. I didn't know how to run a business, and I hit this ceiling. I just didn't know how to grow my rent roll anymore. And the opportunity came up to invest in or go into development with my husband, and I took that opportunity. We found a site in Hurstville that was subject to DA. It was in council, and it was really interesting because the architect designed the building as a bit of a joke. It was literally 2.5 meters wide, the site, on a corner. Yeah. Wow. It was so great. 2.5 meters wide on a corner block and a prime position. He designed it as a joke, never thinking that it would actually get approved, but it did. And it was 6 units. 6 units with 4 parking spots, I think. 4 parking spots on
2.5 meters wide.
2.5 meters wide by, I can't remember how long it was. Yeah, the design was really clever, the way he had it designed. And it was kind of staggered, one, with unit number 6 taking up the whole top floor. Yeah. And we bought that subject to DA. So we started off basically with $1 million. I'd sold the majority of my rent roll by then, rolled those proceeds over into our development fund. And so we started off with $1 million, and we purchased this site. I can't remember now for the life of me how much we bought that for, but it was a really, really good price. I think it was about 70 or 80,000 a site. So do you guys know how to actually work out how development sites are priced? So
I mean,
when you're talking about pricing development sites, you price it per site. So if the going price is say $100,000, it's called $100,000 a site, right? And if you can get 6 on there, then it's $600,000. So I think we bought it for about 70 a site back then, so about 580,000 or something like that. I can't remember exactly. Lo and behold, it got approved. We developed it. We sold. I thought I was great because I sold it to one person who wanted to buy the whole lot, and then they were going to on-sell it. And then 3 weeks before settlement, they actually couldn't get the funding, so my sale fell over. My sale fell over, and then I was scrambling to find purchasers for 5 of the units. We decided to keep one of the units, and then we eventually sold all of them off. So I
just want to take a step back, because we're sort of skating over a lot of details here.
Here we are.
It's just like, okay, you've found. So I'm watching at home. I'm like, okay, because next week we're going to be continuing developing theme, but tonight it's about your journey, Jo. I want to know, because you said here you started off with $1 million, sort of your development fund, because that's often a misconception but it's a I suppose a perception that you need money to develop. So just want to talk about that. How do you think about that? Do you think you need, or is there a way to develop without too much money, or how do you approach that question?
You need a little bit of money to start, but you can't start by doing 6 units. My husband, when he started, he did a house. He bought a piece of land, he built a house and sold it, and then did it again. And he did that a few times. And then he went from a house to a duplex, and then he went from duplex to villas or townhouses. And then he went and made the move to apartments. But apartments is where you can make good return on your investment.
Is that because of the bigger capital typically get involved? It just wipes out the mum and dad investors?
You've got economies of scale when you're building it at those sorts of sizes. So construction costs on a per unit basis go down. Land costs on a per unit basis go down. Everything goes down because you've got those economies of scale. So, and it's just, most plans are cookie cutter. So it's one level on top of another, on top of another. And you're just repeating it, level after level. So the construction itself, once you get out of the ground, is easy.
Well, I've been told because I've actually got a development book in stores. I'm not a developer, but I interviewed quite a lot of developers, and they said basically it's the same amount of work as doing a very simple duplex. There's other complications, obviously, with apartments, but it's the same physical amount of work to do it.
The process is exactly the same. Yeah.
And how did you feel about doing like your first ever foray? Yes, your dad had dabbled in and done some developing. How did you feel about going straight into like a 6-unit development? Was that a little bit uncomfortable, or was it just simply okay?
Can I just say, I was crapping myself. I remember when I signed the agency authority with the sales agent to sell the units, my hand was shaking so much that I couldn't actually sign the authority. I was that nervous. So, but I'm really lucky that I had my partner, my husband, who had been there and done that, and he really guided me a lot. So, and the way it worked, the way it eventually ended up working was he did all the stuff on site and I did all the stuff in the office. So he took on all of the building and construction stuff, and I took on all of the actual property development stuff, but also the construction contract management stuff. So it worked out really, really well. But it was very scary. It was really, really scary.
I'm actually, this is, I suppose we didn't, when we had the pre-chat, it wasn't about a little bit of the detail, but this is, I suppose, the stuff I wanted to hear, because I had a chat with an investor a couple of weeks ago, and they sort of said, what are the things you want to hear more of? And it's like, well, the mums and dads, like you're beyond, you're like, we'll hear more. You're definitely like doing 6 units is not a mum and dad kind of move, but you're actually telling us about that detail. It's like, yes, and the thing I'm pulling out as well is it's very hard to be a developer and develop the whole project. It's kind of about the team approach, and your strengths was managing the contracts and et cetera. It's like me, if somebody asked me to do everything in development project, it'd go okay, but I definitely don't. There's weaknesses I have, and Steve, I imagine you probably have some as well. So that's kind of.
I'm perfect.
Yeah, perfect. Okay, we'll ask you after next Tuesday, next Wednesday. We'll ask
we complemented each other very, very
exactly.
well. So yeah.
Because I talk.
Okay, go on, Jeff.
No, because I think that's important to acknowledge where you're really strong at, and then I suppose where you don't have that sort of expertise or I suppose interest, then it's like, well, who else do you need to get on board to help you out? Whether that be, I suppose, a project manager or whoever it is. But you go, Steve.
I was going to say, looking back now of how far you come and established, was there anything you probably would have changed or done differently starting out doing the development? Because that's when most people watching on AusProp are at the point where they've got a little investment portfolio, thinking whether they should jump into it. But is anything looking back you've been like, probably shouldn't have done that, or should have done this a bit differently, or you just nailed it because you and your partner were a perfect mix of kind of managing it?
Well, without sounding contrite, I think we nailed it but only because he had that previous experience. If I were starting from scratch by myself, there's no way I would do that. Building units can be really, really tricky, especially if there's basements that you need to get into. So absolutely start just with a basic house or even just a basic granny flat, and then just slowly inch your way forward like that. But if you do want to go into the unit space, if you have graduated to that, then absolutely go and buy yourself a site that's DA approved already and cut your teeth on that before attempting to consolidate a site and get the DA yourself, because that's a time suck. That is such a time suck and such a money suck. So buy yourself a DA site, get your team together, and then do that before you then graduate to identifying and consolidating your own sites.
What's the difference between margin between buying a DA approved site and doing it versus buying one and doing it yourself? Are you talking
great question, Steve?
Like 10, 15% to 20%? Like, what's the general rule of thumb?
I couldn't answer that.
It just depends.
Yeah, it really does depend. But you know what? There is not a lot. Back in that day when we were doing that, there were people calling themselves developers who would do exactly that. They would consolidate sites, ram them through council and design really shitty buildings, might I add, and just for the purpose of then on-selling the DA. And they would probably make, I'd say, 30 grand a site for doing that, for very little outlay for themselves. But I don't know that, especially for smaller sites, there's not a lot of margin in it.
Yeah. Okay.
Not these days.
Well, that's what I was going to say. Nowadays, like, I got a little development arm of business. It's tough unless you go high end. It's really tough to make a margin.
Yeah, and I suppose as well, the thing that about that development that you did is there is I suppose you had a little bit of capital and all that behind you. So it's not to say that you kind of you already had a few runs on the board. You had the combination of your skill set, and that's what sort of made that relative a successful project. But I think there were bigger things to come for you, and let's kind of talk to that, because what was next after you sort of handled that?
So the reason why I started crapping myself when my sales of those units in Hurstville fell over, because I had already committed myself to my next site based on the sale contract of Hurstville. And projected profits. I had already purchased my next site. And scheduled the settlement based on settlement of Hurstville. So, I was in a bit of a pickle. I mean, we had a little bit of money left over, which was really good. So, but our next site was in the northern suburbs of Wollongong, called Woonona. And again, we purchased a DA approved site for, it was 12 residential units and 1 commercial unit. So we ended up, I think we ran those 2 sites simultaneously for a short amount of time. Whilst we were finishing Hurstville, we started the demolition on Woonona. I think that's how we did it. but then we went, so we did those in Woonona, and that was a complete success. Like, we sold pretty much everything off the plan. We retained the shop. We leased that to a baker. And I think I kept 3 of the units in that particular building. I kept 1 unit in Hurstville. So our philosophy was, we're going to build a fantastic residential portfolio that's going to allow us to retire. We would never retire, but allow us to retire. And the way we were going to do that was we were going to keep our profits in the development that we developed. So every development that we finished, we would sell enough to cover the debt, cover the GST liabilities, and just give us a little bit of money to throw into the next one. And everything else was retained in property. So in Hurstville, we retained 1 unit. In our next project in Woonona, we retained, I think it was 4. It could have been 3, maybe. I think it was 3. So it was the commercial shop. So I really love commercial investing. So we held on to the bakery in the front. And
Jeff, stop laughing.
I can't. Yeah, like we would. Yeah, we set.
He knows what I'm thinking, and I'm not allowed to say it.
Okay.
No, say it, Steve. Come on.
Say it,
I'm the commercial guy. She's like, I love commercial. I'm like, who doesn't? Who doesn't?
I know you're the commercial guy. So we retained, I think it was 2 plus the commercial, and we used that equity from those units that we held to then tip into our next project, which was also DA approved. It was 22 units and a shop in the city in Wollongong. Was there a reason for
Wollongong? Was that kind of where you're based, or you knew had a connection there?
Why not Wollongong, Steve, mate? It's amazing.
Wollongong at the time represented exceptional value. It was just starting its growth trajectory. Sydney at the time had kind of hit a peak where sites were there was no value in the sites that were for sale, and it was just a bit crazy. So Wollongong tends to be, or it used to be, about 2 to 3 years behind Sydney at that time. And I grew up down there, so I know the area incredibly well. And it just represented great value. There was so much opportunity. I mean, now it's been very well developed, but back then it was completely undeveloped, and it was affordable for people who could no longer afford Sydney. The train commute from Wollongong was easier than what it was when I was commuting. It just made a whole lot of sense.
The thing I want to, we're kind of where you did that project successfully at Woonona. We're sort of skating. The thing that I didn't really ask, and maybe it's apparent in, why did you go down the development path rather than the traditional buy and hold? What was the why behind it? Was it kind of quicker or more wholesale? Yeah,
wholesale investing. Yeah. It's the, I'm not going to say the easiest way to buy properties at wholesale, but it's the way that we knew, and it complemented our skills. It's what we knew how to do, and it was just our way of building our portfolio in the cheapest way possible. I know it sounds ridiculous, but yeah.
One of the random questions I thought of, because you've done so many developments, how do you go, especially with the experience of your partner, choosing builders? Like, what are the considerations you use when you actually have to get to a development and choose a builder? Is it like go with who you trust? Is it go cheapest, make it cheap and nasty, make it towards high end of the clients that you need? Or like, how do you go about actually selecting a builder? Today or back then? Probably today is probably more relevant. Yeah, because we built our own stuff. So we were developer builders. So the way we did it, we had our development company, we had our building company.
and the building company was run as a legitimate building company. It priced its projects properly with a proper builder's margin, because that is what the
insurance issues otherwise. Yep.
But the funders expected it, because they wanted to know that if we fell over as an entity or as a group, that another builder could walk in and take over the contract and make money and still make it a successful project. So everything had to be legitimate. But we built the properties ourselves. Now, I would never advocate to go cheap and nasty ever, especially now that there's legislation, I don't know the proper name, but it's the Design and Building Professionals Act, I think it's called, the BPA, anyway, whatever it is. Some people out there will know what it is. Building Designers Professional Act, something like that. Anyway, since that's come in for Class 2, it's incredibly difficult to go cheap and nasty. You have to, the Act basically makes you, as a builder, price the project properly it's just much more difficult. The days of design and construct contracts are largely gone now. So that's how builders became cheap and nasty, or gathered that reputation, because they would just give you a price. Oh yeah, look, it's $1 million, and don't worry, I'll do all the designs for you. You get your DA, but then it's the actual construction certificate design work that I'm talking about here. Oh, don't worry about that, we'll do that. And then they go and design to their budget, not to what the original intent of the DA was. So it's because of all of that stuff that the Design and Building Professional, I can't even say the bloody name, but that act came in to stop all that stuff. So now a project has to be properly designed, it has to be properly documented. Everything needs to go up to a portal where it can be reviewed by government to make sure that everything's above board. The designs have to be declared, which means that it's buildable and been peer reviewed. So there's no cheap and nasty. You can't do it anymore.
It's the DBPA, the Design and Building Practitioners. 20.
Thank you, that one.
There we go. I'll look this up. The thing I wanted to, I suppose, also point out is that you, I suppose, had the capital and you had a clear vision. So I think, and to Steve's point, it's like you had if your advantage is in Airbnb, like that probably you play to your strengths. So a lot of people starting out may not have that connection, and some people will actually, but they shy away from it because it's like, I just got to do that for my job. So play where, if you're starting your first, maybe not do development for your first. But then if that's where you want to go, it's a good way to accelerate your property investing journey, and then maybe moving some funds into commercial or doing both at the same time, as Steve said. There is some more, I suppose there's a twist in the tail though, because your 22 in Wollongong, that was where there was some things that happened around that. And we'll talk to that, because I think that's probably where there's a lot of lessons for yourself, but probably just a bit of bad unlucky as well, I imagine.
It wasn't the 22 in Wollongong, it was the next one.
Oh, wow. Yeah. We talked about this on Friday, but you did so many projects.
So whilst we were building that 22 unit project in the city, we were looking for our next. So we were always planning our next project, and I found a site. It was an absolutely gorgeous site in a very, very desirable part of Wollongong. Some would refer to as the rocks of Wollongong. It was the ambience was fantastic. It was completely undeveloped. Developers had been in the city, but they had been on the upper end of town, up the top end of Crown Street. We're looking more down towards the South Beach area, down near where the stadium is. And it was a completely raw site. So a couple of people had tried to consolidate it before, but they were not successful for whatever reason. But we managed to get all 4 vendors on board with our vision for what this project would be. And we ended up securing the site subject to DA on an option. So 4 individual options. And then we set about going through the DA process. And you know, that has got to be, despite its challenges, the most rewarding project I did, because it's the one project that I had a vision, and then I was allowed to exercise my creativity in creating this project, getting it designed, and getting it through council. It was just such an amazing process. It was really great. As hard as it was fantastic. And so we assembled a team. We knew who our architect was going to be. We knew who our engineer was going to be, who is still our engineer today, by the way, all these years later. We knew who a couple of our other consultants were going to be. We needed a town planner because of the sensitivity of the area. So we brought a town planner on board. We had pre-meetings with councillors, council people and all that sort of stuff. Yep. And we lodged the DA, and oh my God, the objections we got, far out.
Oh, really?
Oh yeah.
What was the vision? Like, what generally give us what was the site?
So the site was 4 shops in a completely undeveloped part of town. It was almost like the Rocks Markets in Circular Quay. It had that real old world feel to it. And the town all of a sudden hated us because we were Sydney-siders. I mean, forget the fact that I actually grew up down there, but hated that we were Sydney-siders coming to ruin their town. We were going to ruin the area, ruin the ambience. We were going to, just see the death of Wollongong, basically. Mind you, you went down there and couldn't get a coffee at 2:00 in the afternoon because everything was bloody closed.
You still can't, Joe. You can't. I mean, that's why I have a coffee machine in the house. But no, I could only imagine what it would have been like. This is because that's timestamp. It was around 2005, 2004, yep. 2005. Like even now, like you started to, and yes, there is a lot of developing that's going on, a lot of apartments now, but there is that perception in 2026. It's still like it's NIMBY kind of not in my backyard kind of thing, and it's happening anyway. But so I could only imagine the objections you would have come across. It would have been people like,
See, you're damned if you do and you're damned if you don't. See, if you don't consult with community beforehand, you get them offside. But then if you do consult with community beforehand, you're opening the door for them to tell you what they want. Hang on a minute, I'm running a business here and there are financial parameters and objectives that I need to meet as well. Yeah, sure, I will negotiate with you and try and give you something. But oh my God, I mean, they were very organised. They were very, very clever. And we thought we were ultra clever too by having the right town planner in our side. And he had amazing relationships with the councillors, with the council, with the general manager. And we just thought, you know what, it's not going to be as bad as we think it's going to be. You know, we did community consultation. Our architect was amazing in running all of that. And we banked on a 12-month approval process because every other project in the area at the time was being approved and receiving their DAs within 12 months. But ours took 2 years, and that was really, really problematic. I mean, I wasn't paying any holding costs, so that's fine because I purchased the properties on an option subject to DA. Oh, except for one of them, I actually purchased that outright. But the other 3... were on an option. So I wasn't carrying any holding costs. That wasn't the issue. But the issue was time. The time it was taking and the fatigue and the fight. That was a real issue. I mean, eventually we got it approved, and what we got approved was 38. Oh, the other problem was that there was a height overlay, but it was in the process of being changed. So we went for the new design guidelines, whereas the old design guidelines only allowed 6 stories, but our DA was for 8 stories. So the project was 32 residential apartments, which were higher end than what Wollongong had seen otherwise. 32 residential apartments, 2 levels of basement, a fantastic pool and leisure area on the 3rd floor. I said 2 levels of basement, didn't I? And ground floor retail and 1st floor offices. So it was 1,500 square metres of ground floor retail, I think. About 500 square metres of office space on the 2nd floor, and then the 32 apartments. And there was we had a rear lane behind us, so it had rear lane access. So the frontage was completely clear and it was all retail in the front. We had a walk through from the main street into the back lane, which then followed onto the next main street behind us. It was a very, very well thought out and very well designed building that we eventually got approved after 2 years. But that in itself was the problem.
If people are listening to the timings here, 2004, 2005, 2006, there's something that's coming. It's kind of like that shark, and it's like Jaws. Yeah, because I mean, I reckon we'll go to the challenges and complications that delay led after our first break. But Steve, I want you to ask maybe a quick.
Well, can I have 2 questions, more technical ones? First one, how did it work with the options? Because it obviously got dragged out for 2 years. Did you have to obviously renegotiate options with the 3 other properties that you had options on after 12 months or whatever it was, or?
Yes, there was a renegotiation from what I can recall, but everyone was on board. What I was very, very good at that time was keeping everybody up to date with what was going on. So I had the vendors' full support along the way, and I leveraged that support, and those vendors were very well-known business people in the area, so they also assisted us with discussions behind the scenes, trying to get this darn thing approved.
So I imagine that's because they get a premium for their site, so they obviously wanted to go ahead as much as you do.
Yes. See, what our philosophy was, actually, I'm glad you mentioned that. Our philosophy was not to negotiate too much on price, but negotiate on terms. Yeah. So the market price was the market price for development sites, and everybody knew what that was because there was just so much development going on. So we decided not to negotiate on price. We gave them what we wanted, but we gave them what they wanted rather. But it's still, the project still worked from a financial point of view, but it was the terms that were more important to us.
What terms protect you though? So what stopped them, say, at the end of the 12 months for the option being like, cool, you can give me more money now, or I'm going to keep your option fee?
We didn't. Oh God, that's an excellent question. You're really testing my memory now. I'm
just curious because I love options, like obviously like commercial deals and stuff like that, the opportunities there. But the other question was, what was generally the objections? Was that just everyone on hating that it was an apartment block?
Yeah, it was a real NIMBY mentality. They were worried about the little businesses that we were displacing. So there were a couple of local businesses that were being displaced as a result of the development, and so they were really concerned about that, and they were just concerned about the feel of the area being manipulated and changed.
Yeah. One of this
Wollongong doesn't like progress. Wollongong is very
this does not really that much to do what we're talking about. It's a funny story. So I lived in I grew up in Wentworthville, and they build the Coca-Cola factory in North Parramatta next to like a McDonald's and that. So they're building a big building. And I remember them people picketing about that, being like, we don't want Coca-Cola. But they were also holding McDonald's drinks. And I'm like, I'm 99% sure Coke is in that drink. But that was the craziness of it.
There we go.
Very much the same sort of stuff. Yep.
Okay, we're going to throw to our first because I want to hear more about how it went and some of the things that went wrong. Or not went wrong, but yeah, I suppose it did. We'll call it. We'll jump on and we'll be back very soon.
Oh, Jeff, I wish there was 3 investing books that covered everything property.
Oh, Joe, there is. Steve has 3 books now.
That I do, guys. I've got 3 books now. You probably don't even have to follow this group anymore. Just kidding. You want to keep seeing and hearing from me, of course, so stay involved. But in all seriousness, if you want to get the full picture of investing, residential, commercial, and development, these 3 books have you covered for the fundamentals. For AusProp members, here's the best part. I'm giving these books to you for free. Just cover the postage and I'll send them right to your door. Go to policyproperty.com or click the link below and get your copies today. You can also get all my spreadsheets, checklists, and resources free on my website. Happy reading, gang.
We're back. When's the fourth coming out, Steve? Is it Airbnb investing?
Let's get through the next 2 or 3 weeks with Bubs, and then we'll get into the fourth one.
How to invest with children, or yeah.
No, the idea is I think I mentioned this on last podcast. I'm going to do one of I'm going to interview all the buyers agents and get them to have a strategy. Say what the best property strategy, and just have 10 different strategies. So get a Joe for development, and then an Arjun for his data one, and then get someone who does value add, and just do all the strategies.
Yeah, well played.
Oh, that'd be a great read.
Yeah. Right. So, Joe, the Wollongong, the last sort of throws of and people who didn't know, actually, I'll let you share because it's not for me to share. What sort of the timing gives an indication, but what actually started to go wrong with the project? What was the challenges, and did it go pear-shaped?
The problem was the time it took to get approved. So had the project been approved within 12 months, as we anticipated, then I wouldn't be sitting here right now. I'd be...
Hopefully it would be.
I'd be sunning myself on some remote island somewhere, because that was the project that was, whilst we were never going to retire, that was the project that was going to buy my dream home and allow me to live a life of choice rather than anything else. So the construction itself went fine. It was pretty unremarkable from a construction point of view. But what happened was when we finished construction, and construction was a while. We spent so long in the basement. I can't even remember now how long it was, but the basement was long because we were near the water table. So there was lots of water issues, but we took a long time to get out of the ground. But by the by, a week after we finished, the project itself, despite the NIMBY attitude of a lot of the people down there, there was also a lot of interest from investors down there and owner-occupiers alike. So we sold a significant amount of the properties off the plan. Again, we had already identified those properties that we were holding away from the market and were going to retain ourselves. And that included the office space, all the ground floor retail, and a couple of the residential units. Don't forget, we had 5 other units or 6 other units, residential units from our previous projects that were all tipped into this as our equity contribution. So technically we put no cash into it in the beginning.
Can I ask, because maybe this is more a wrap up? We're sort of in the throes of a big story, and there's 3 letters that kind of wrecked this project. But what were what was one of the mistakes around structuring that you made?
Structuring is a massive thing that it's a massive lesson. So we had a trust structure, but it was the trust that owned the shares in the property development company. So one of the mistakes we made was that we did the project in a PTY Ltd, and so in a company structure, but it wasn't a special purpose vehicle. It was our general development company. We still had our construction company as a separate entity. We needed to keep it that way. But our development entity was a simple company structure. Yes, the shareholder was a trust, but we didn't receive. We had some very good people on our team, but in hindsight, that perhaps they were not as savvy as what we needed them to be. But so we did not silo all of the projects individually as special purpose vehicles, which in hindsight is a really big no-no. You don't do that. So for anyone who wants to do property development, each project should be, I'm not an accountant and this is not advice, but each project, in my opinion, should be contained within its own special purpose vehicle, SPV, so that it is quarantined, losses or profits is quarantined and doesn't contaminate or pollute, if it's a loss, any of your other holdings. We didn't do that. So we had everything held in a singular company, which is, I mean, everybody knows that that's just really dumb. But we did.
I think the starter developer's not probably going to know that, Jo. Like that's why I kind of wanted to bring it up, because and thank you for being vulnerable, and we haven't got to the, I suppose, the end crescendo of what ultimately happened, but we can kind of see where this might be going. But how do you think about that, Steve? Do you sort of see a lot of your people sort of, because you'd have a lot of business owners who you're buying commercials for, are they sort of separating and not necessarily relevant? Is that what you're doing as well, Steve? Or
like Jo said, not financial advice, but yes, every single investor, that especially high net worth, should be doing that, assuming the cost of doing it doesn't outweigh the risk. But we've spoken about this 1,000 times, Jeff, of like getting a good accountant, not just one you like, someone with actually experience.
My accountant was brilliant.
Pay for it as well. Pay the extra $5,000. Like, it's worth it.
Yes, it's absolutely worth it. You know what? I have learned is I don't skimp on quality advice. No. Never. Yeah. Since my development days, I do not skimp on quality advice. I do not skimp on quality service. If someone is a professional and they can demonstrate their bona fides and they've got a demonstrated track record, you're going to pay them. I'm going to pay them what they want, because I want that advice and I want that protection and guidance. Anyway.
And so what happened next? We kind of had a bit of a delays and we started the building. It took a little bit of time, but what happened next?
We finished the project. We had a whole bunch of pre-sales on the apartments. All of the ground floor retail space had been leased to national businesses. I was keeping all of those, so I wasn't selling them. I had leased the second floor office space to a bank. Again, I was keeping that space. I wasn't selling that one. And my cash flow projections on everything that I was retaining, including the residential apartments, I was making about $750,000 a year in rental income alone, which is amazing. Wow. The bank was a big chunk of that, of course, but the retail outlets downstairs were also very good. And I was very clever with how if I say so myself, with how I strated them all off and wrote the strata management statement and all that sort of stuff. So I really made sure that I protected my interests as far as that goes. But again, that's my property management background coming in there, knowing how strata schemes work and all that sort of stuff. So, we finished the project, had a grand opening. It was open with a lot of fanfare for the business community who had supported us. And a week after our grand opening, the letters GFC was splashed across the newspapers across the country. And what happened there is that every single one of our contracts, every single one of our pre-sold contracts fell over because nobody could get any funding any longer. So we all of a sudden were holding this $30 million building. We were geared to 50%. So the debt itself wasn't unmanageable in comparison to the value of the property. But because of the economic times, because of the global financial crisis, number one, because it was a brand new building, even though it had been strata titled, they knocked about 15-20% off the valuation because it was brand new. And then because of the economic times, they knocked another 20% off. So pretty much overnight, we lost about 40% of our value. We lost 40% of our value, so which means our debt was no longer sitting at 50%. It was, I don't know, about 80 or something. 85, and so that's a problem.
Particularly in
because it was a $15 million debt.
over like 3 months or so, if it just got done 3 months sooner with like council, one of those sliding door moments like you mentioned.
Absolutely. Like I said, we were banking on a 1-year approval process and it took 2. And that is another massive, massive lesson that we learned. We brought on a town planner thinking that he would be the best person for the job because of the relationships that he had, and he would be able to smooth everything and our project would quietly go through. But what it turns out is that he was more interested in saving and preserving his relationships than advancing our interests, his paying clients. And so when we pushed for a Land and Environment Court process to start, he resisted that completely. It wasn't until we lodged our Land and Environment Court papers that the development magically got approved. So it's so important to make sure that not only you have the right consultants in your team, but they are actually got your best interests as the paying client at their on their brief and not preserving their own relationships.
Is there a way that you can, I mean, yes, it feels a bit unique, but is there some kind of questions you can ask your accountant, your property manager, your town planner, your architect? How do you find that out before you get into the process with somebody?
I don't know, and that's the honest answer. But as soon as you have an inkling, bloody well act on it. We didn't. We were so scared to fire this guy because we was concerned about another town planner not having the expertise that he had or the relationships that he had. So we were so fearful of rocking the boat, given the opposition that we had to the development in the first place, that we didn't want to rock the boat any further. So we kept him on our team, and it was absolutely the single most wrong thing that we did. Absolutely.
Which, like, in hindsight, you wouldn't see that at the time. You're worrying about all these other things of margins, builders, getting the profitable, and the town planner. Well, imagine you could maybe ask town planners moving forward, give me a time that you've had an issues with complaints or this and this, and find out what they kind of be. Again, you don't know. They're all going to give you the answer you want. Exactly.
That's the thing. It's when I was pushing for a Land and Environment Court process, because the law is really clear. 42 days is what council has. 42 days to come back with something. And when that didn't happen, I should have been much more firm then that we're going down that path and just rocking the boat. I was too scared to rock the boat because of the sensitivity of the project. And admittedly, I was quite emotionally invested. Yeah.
I just wonder though, because if you'd have pulled that card at that stage, maybe the outcome might have been different. Maybe they would have said, well, okay, like, too bad, so sad, it's not approved. But then what did you have then?
They couldn't not approve it. This is the thing, right? Because we met every single planning guideline except for the height. But the height limit that we were applying for was already in an advertised DCP or LEP that they were seeking to get approved anyway. So we were only designing height in accordance with their future planning instrument. So there was no way they couldn't not approve it. But we were just too darn frightened to rock the boat, and given the sensitivity of the project. That's what our downfall was.
Yeah, and there's no incentive for the town planner to get it done quickly as well. Like, there's no
but we didn't see that. We were so blinded because there were lots of issues. There were lots of issues with the project. I mean, there were traffic issues, but our traffic consultant was absolutely amazing, and he really took it up to council and fought for us. He was just amazing. I wish I could remember his name, Kevin something, but anyway. All of our other consultants were fantastic, but we couldn't see this because we were so invested in the design process, and we really wanted to. The objective of this building was to build something beautiful. We weren't just interested in slapping it up and cashing out. We wanted to build something that stood the test of time and lasted, and we could drive past in 20 years' time and go, wow, that's amazing. It still looks fantastic. Well, it was beautiful. We spared no expense. I mean, we imported timber from Brazil, beautiful light fittings, hand blown from England, zinc roof. Oh my God, just the money we spent building it. It was a project that we could hang our hats on. And so we were so committed to the design, and we were so concerned about getting that all right that the town planning was almost taking care of itself, if you know what I mean.
Yeah.
And so we weren't paying as much attention to that aspect as we were to everything else. And again, he wasn't the right person on our team, but we couldn't see it because we were doing so many other things.
Couldn't see the forest from the trees kind of thing. Rebecca asked this good question, and she says, what did the planner use as their reason for resistance? Was it about, or did you ask what their resistance was? Or?
Yeah, he was like, we're talking to this person, we're talking to that person. This person said that. The town planner operated in a very stealth mode. Again, it was about him preserving his relationships and thinking that he could talk his way through to the development of the project rather than actually saying to them, no,
let's get this done.
No grounds. Yeah. But again, it's my fault because I engaged him. It always comes back to me. It's my fault. I engaged him. I didn't ride his back hard enough. I didn't push him. I didn't stand my ground hard enough and say, no, this is the direction we're going. So it will always come back to me.
It's always a tough one in hindsight, Jo. That's the thing, because you get stuck between being a lovely person and trying to be too hard-nosed with the people that you don't know aren't working for you.
Yeah, these days, 20 years later, a female in the construction and development industry is much more widely accepted. But back then, there were very few women who were working in that space. And honestly, I had men laughing at my face when I was sitting there giving them their what fors simply because I was a female, because they were so unused to seeing that in their space. I mean, these days it's different, but it was very difficult for me to get taken seriously in that space.
Even though you'd had done the projects, like they weren't.
Oh yeah.
Wow. Yeah. Geez. Thanks for I know. I think thanks for telling that or giving us I want to learn more. What was next, and we don't need to. I suppose.
Well, what happened there? So, like, you've obviously was valued at 40% less or so. Was it a big loss? Was it a break even and lick your wounds? Like, how'd you come back from that?
It was a total loss, Steve. So what happened was the banks, so our funder was not your ordinary NAB or St. George or whatever. Our previous projects were funded by your ordinary banks. We had an amazing relationship with a couple of the big fours, and I got to a point where I rang my private banker and I would say to him, hey, Andrew, I need $2 million. How easy is it going to be for me to get that? And he'd go, I'll have it to you in a week. So, but we wanted to expand our, how do I say it? We wanted to expand who knew us so that we could have access to funds even easier. And so we went with an investment bank, a particular investment bank for this. And right up until the global financial crisis, they were amazing to deal with. They were partners. They told us we were partners. And then and what happened after the global financial crisis was that they continued to support us for 2 years. But it's important for me to say that they had their end game and it was very different to my end game. And my end game was, well, I'm just going to write it out. I'm going to lease as many of these units as I can whilst continuing to sell. And we did that. The whole building ended up being, almost the whole building ended up being leased. Like I said, I already had income from the bank and the retail. And slowly we were selling, but we were not selling quick enough for the bank's liking. And then they started playing funny with our GST facility. So when you do construction, you have two finance facilities. you have your construction facility, and then you have a GST facility. And the GST facility needs to be paid back every single month. So when you have a sale from your, when you sell a property, when you draw down your money from your progress claims, you draw down from your construction fund and your GST fund. And then when you do your BAS at the end of the month or at the end of the quarter, actually they make you do it monthly, you get your GST refund and you repay the GST facility. And what happened was they started playing around with our GST facility, and they also started withholding the GST from the sales. So that was at the time the margin scheme was just coming in or something. There was something to do with the margin scheme, and it was very clearly identifiable what part of the purchase price was GST and what part was not GST. And I had to remit the GST to the government at the end of every sale, but the bank stopped releasing the GST because they wanted to take that GST money and use it to pay down the construction facility that was sitting at about 15 million. And so then that caused problems for me with the ATO, because all of a sudden I'm having these sales going through, but I'm not remitting any GST to them. So they start knocking on my door and asking questions. But ultimately, the bank decided that they were not going to support us any longer. So, and I remember it was the 10th of February, 2010. It was a week after my son started kindergarten. And
it's pretty much almost 16 years to the day, actually. Today's the 11th.
Oh my God, today's the 11th. Yeah, you're right. Yeah. They put us into receivership. We lost everything. I walked away with $60,000, my car and my clothes. And that's it. Yeah.
And then all the other properties,
gone. No.
Yeah. What about all the other properties as well?
They took everything.
Yeah, everything. Okay.
Pay down.
Yeah.
That was why I asked this. That's why I mentioned the structuring question when I did, Steve.
Yeah. They just appointed a receiver.
Yeah.
They came in, took everything. Yeah. And slowly
their agenda would have been to get their money back, and nothing more really. They would have sold at the price to get their funds back.
Yeah, exactly.
Whatever.
Look, I'm really thankful they didn't bankrupt us. They told us they were never going to bankrupt us. They knew that it was just timing and that we did absolutely everything right, and that it was just circumstance. But what annoyed me was that their agenda, they said one thing, did another completely. And, they supported us for all these years. So we had a relationship with them for 4 years all up. And that whole time they were telling us that they were partners and they were our partners. And then when the doo-doo hits the fan, they just changed. And I understand they're in the business of making money, but I'm not in the business of losing money. So anyway, they always had their agenda. The moment the GFC hit, and what's even annoying, I mean, they knew the GFC was coming. You think they bloody well tell you, but no. But
Can I ask a hypothetical question? How would it have played out if you had the special purpose vehicle, like your own company set up just for the development and kept yours separate? Like how would it look now? Do you think you just would have declared bankruptcy and then kept them, or how would it actually
I would never have declared bankruptcy, but I would have retained those 6 units that I tipped in as equity.
Okay.
So I would have been able to retain those, because if I'd have taken, I don't know how, but they would have been protected in some way, shape or form.
Because what I'm getting at is if they were used because of the losses, but you didn't have that loss, then there would have been obviously a deficit that company would have had to wrap up, I suppose, and just as a company like, I'm just trying to get the lessons learned in my head of like, cool, what would have been a better way to do it?
Yeah. Look, I should have taken lines of credit out on each individual property with different lenders is what I should have done, and made sure that I only took LOCs where the rent was covering it and there was no shortfall, right?
Yeah.
It would have meant less equity tip in, But the value of the site had increased so much when we got the DA through, because don't forget we purchased it as a raw site, that it would have been a sure bet, but I didn't get that advice. Had I have had one of those in a SPV and done it that way, I'd still have those properties because I'm a never sell person. So I would have had those properties, and like I said, I'd still be having a very different conversation today than
Yeah, I mean those in the locations Woonona and up in Hurstville. Yeah, I mean and Wollongong, you would have probably had these at about 2, maybe I don't know, 250, maybe a little bit less, and they would have been at least double, I imagine, maybe a little bit more than what they are now, paid out and generate some nice cash flow as well. Yeah. The audience is absolutely really getting behind you, like saying, so stressful. This is reality. Thank you for sharing, Jo. It's look, we're really at the hour 30. I want to know kind of, because you are sort of getting back into developing, because that was a huge hit to recover from. So it's amazing that we've probably met. We've had a chat. I've met you once and twice and a couple of times. And we've not, I suppose it's hard to have these conversations over when there's 40 people around.
In a noisy bar,
But let's, we'll throw to our last sponsor. And I hope Joe's not watching because he'll be upset that we run it this late, but that's okay. And then we'll get back because I want to hear more lessons and throw your questions, team. And what next for Joe as well. That's what I want to know.
Everywhere you look, someone else is making money in property except for you. Your mate, he just bought a house. It's already gone up $100,000. There's some bloke on Facebook. He's bragging about pulling in a 7% rental yield. Meanwhile, you're stuck scrolling real estate and domain, confused as hell and having no idea about where to start. Or maybe you're that mate that's got $100,000 in equity. You have a few properties under your belt, but you feel stuck. You're unsure about how to scale without over-leveraging and not knowing what the next right move is. So why does it feel like everyone else has some kind of secret that you're missing out on? It's because they do. There's a reason some people keep stacking properties while others sit on the sidelines stacking excuses. There's a reason why some investors buy under market value while others pay too much. There's a reason why investors know the hot spots before there's any heat. And there's a reason that some people build $150,000 in passive income while others just spend years thinking about it. And it comes down to knowledge. And that's exactly why Jeff Miles and I, Jo Tucker, created the Level Up Property course to hand you the exact step-by-step process that we've used to buy over $100 million worth of property in today's market. We've built Australia's largest property investment community with over 80,000 members, and we help everyday investors secure hundreds of thousands of dollars in equity, all without wasting years of their life trying to figure it out the hard way. Making an uneducated decision on the biggest purchase in your life is just gambling with your future.
Stop it. Get some help.
And this isn't just another how to buy property course. Let's be clear though, this course isn't free. What? And neither should it be. This is our life's work. We've spent over 100 hours each on this course alone. Oh, babe. Okay, video number 3. Number 4 with million does... Fuck. Done. We've got decades of experience, millions of dollars in deals distilled into a repeatable process that you can take away for yourself. If you're looking for free advice, there's plenty of noise out there. You can go and find that if you'd like. But if you want real, actionable, step-by-step guided process that works in today's market, then this investment is going to change everything for you. By the time that you finish this course, you will have full confidence. You'll have every tool that you need to build an amazing portfolio if you act on it, right? Which is why we have mentoring built in. So we kick you up the butt to make sure that you're kicking your goals. So the real question is, how much longer are you going to watch everyone else making money in property before you jump in and start playing the property game properly? Because the sooner you start winning.
And we are back. I reckon, Joe, you could probably show us a thing or two about winning the property. Yeah, because that's story. Even though I heard a little bit of it the other day, just hearing it again. It's amazing. Steve said
it was gut wrenching. It was absolutely gut wrenching. It was the hardest thing I've ever had to go through.
I see Steve Polizzi said this is literally my favorite live. Is that even the ones that you've been on, Steve?
It's because it's real. It's not just some knobhead like me pumping up his own tires, being like, "Look how good I am! Look at everything I touch has turned to gold." Like it's actually a real story, which is nice.
Yeah. Well, you know what? I mean, I've learned so many lessons from that. And they can never take that away. I mean, yeah, they can take away the properties, they can take away the money, but they can never take the experience that I've learned and earned. They can't take away the knowledge, and they can't take away the drive that I've got. So yeah, I mean, the rest of it's just, what can I say? Property development is a risky game, and they are the risks that you take. You mitigate as much as you can, but you can't mitigate against planning issues like that, and you can't mitigate against financial situations out of your control. I'm
one of those firm believers that you actually, especially investors, have to be burnt a little bit at some stage to realize they're not invincible, because otherwise they just keep getting bigger. The hard thing for you is you did so well that your biggest one was the one you got burnt on, not just a little one of the first one or two.
Yeah, but it is, and it's unfortunate. But you know what? I went down to Wollongong a couple of weeks ago. I saw that building, and I still love it.
Yeah,
I still love it. It's a freaking awesome building.
I might have to go and have a coffee there one of these days. But yeah, no. But I want to hear what's, because I feel like you've told us you're sort of getting back in the game. I want to answer this question from Rebecca, because I've got some views, and I'm sure Steve does, but I want to hear yours, Joe. So Rebecca says, it's clear good accountancy advice is imperative. At what point in your recruitment process do you engage an accountant or recommend others to? For example, I had a look at a potential site, was only viable at the right price, made my offer based on that reason, and it's a no-go. I was thinking, okay, I'll ask the accountant after an offer is accepted. I'm rethinking that as quite naive. On the other hand, we can't go to advice through the accountant every 5 minutes. What are your thoughts on that, Joe?
I don't know that an accountant is actually the best person to get advice for structuring advice. I would go to a specialist structuring lawyer first, but that's what I would do now. I kind of know how I want things structured now, and I have set myself up in the following years. I have set myself up to allow for those structuring things to occur. I have sought the advice of a specialist structuring lawyer for all of that. An accountant's good for tax and money and stuff, but not structuring.
I know a really good accountant.
I was going to say, is there a turning point though? Because the ones you're doing obviously quite large, but if you're just doing a simple duplex, would you say?
Oh my God, I'm still no. I am
good advice.
I'm thinking like I was doing those projects, but I'm going into development. I'm starting again. I am planning as though and running things and structuring things as though I'm a bigger player than what I am.
I think that's general good advice for everything. Whenever I get young business owners coming and being like, "Oh, how'd you grow a big company?" I say, treat it like you're a big company. Don't do things like you're a sole trader.
Yeah. Small-mindedness, and I'm not being derogatory here when I say that, but small-mindedness is really it's limiting and debilitating.
Yeah, the thing I was going to say, and I think, what else is, Rebecca? I'd made the mistake of doing a project, and then having the chat after I've done it, as in like, oh yeah, we're about to sell, and it's a smaller one, like Steve said, and there was some areas that I missed out on optimizing. So I would go and have the conversation and sort of see, based on what you're planning to do. After you looked and gone under offer at the site, the structure should already be pretty clear as to what it needs to look like. And you don't need to, because in that way they can point out the things you need to consider, and the other people you probably need to see as well. You don't need to go to them after, because the site itself is probably not going to shouldn't change the structure too much. No. It might a little bit, but yeah, you kind of go and get that upfront advice on a broad plan. And then once you're ready to, and maybe you set it up straight away. I don't know. Maybe not. There's cost involved, of course. But that's kind of, And if you're ever unsure about something, just pick up the phone to the accountant. As in, like, I wouldn't be asking them for if the site stacks or what I mean, that's
an accountant will never give you that advice anyway, because they're not going to take the risk on that.
No,
you've got to do your own feasibilities. Sorry to jump in there, but
And Rebecca, you've got people. The whole point of these lives is to see people that have been there and done that. You've got people like Jo. I'm sure if you send her a message on LinkedIn or Facebook saying, "I need a good structuring lawyer," she will flick you one.
Oh, I have people approaching me all the time asking for recommendations on any number of consultants and people, and I'm always happy to help where I'm able to.
Yeah, if you feel I can introduce you, Rebecca, if you need, just send me a message.
I think I've got a free strategy session with.
Oh,
Rebecca.
you do? Have you booked? I bet you had one with Jody, or I thought I was setting those up, but I did get a message from somebody.
I've done a couple of them, but Rebecca, reach out. I got Bubs due literally in a week, but maybe in March we'll do one.
Yeah, I'll hold you to that, Steve. You said it on a live. But what you're starting? What are you doing next show? Is it a straightforward duplex, or are you doing? No duplex is straightforward, but it's not 32. What are you doing next?
Yeah. So the projects that we were talking about, I was legitimately running a property development company. I'm getting back into development in the next 1.5 to 2 years. We're building our cash base now. We're assembling our team. I don't intend on creating a business the way I had before. Will I develop and sell? Yes, but I'm not going to do it to the extent that I had before. So I probably will just start off with a few duplexes, again, just to build some more cash base, build that bank balance. I do want to get back into unit construction. No more than 12. No more than 12 in a building. Yeah, 12 I can do with my eyes closed. It's so easy to manage. It's easy to plan. It's easy to run. It's not so big that you're gonna do yourself in if something goes wrong. You can create workable plan Bs that are not going to kill you and bankrupt you, basically. Yeah.
So is that what changes after 12? Is just the risk becomes too great?
Yeah. Look, my risk appetite has changed. Obviously, I was much younger then when I was doing it, and when I first started, I didn't have kids, but I was really aggressive, but I was okay with that. Every development you do, no matter how big it is, it's a risk.
You can do it. You can do a free lot and just take some market burns or whatever happens. You overcapital,
Yeah, but I think that the bigger the project, the more business it becomes, and I'm not interested in creating another business. I'm happy with the business I've got. I'm not interested in creating another business that needs to constantly be fed, and I need to constantly keep people employed and everything that goes along with that. That's what we created. We actually created a monster that needed to keep being fed. So we always needed to look for sites. We needed to keep people employed. We needed to just keep our money turning, and I don't want that again. But I still like developing. It's bloody fun. It really is fun. Despite the risks. 12 is a nice, manageable sized building.
Are you still, if I be as so bold to ask, are you still considering Wollongong, or where are you thinking of doing them? If you don't,
I'm not considering Wollongong at this stage, but I certainly won't rule it out. Okay.
I just want to have a coffee when you're down our way.
Anytime. I'm down for a coffee anytime. But I will look at anywhere where the numbers work. The numbers simply have to work. Because ultimately that is what it's all about. It's the numbers. I have a fantastic, I've set up these fantastic feasibility programs that I still have. I've retained all of my IP that I created when I was developing before. So as long as the numbers work, I'm good. Yeah, so it doesn't really matter.
Your own, is it through Excel, or did you use? There's a Fizo, Quick Fizo. I think there's a couple of softwares, or you did your own. It said intellectual property, so you did your own.
I created my own feasibilities because look, I had an amazing banker. He was not, he didn't put me into the last finance facility, but he was with, I think he was with National Australia Bank, Andrew his name was, and he was amazing. He was just this font of knowledge, and I would pick his brains about how they assess projects, what they look for, and he actually gave me his feasibility spreadsheet that he would plug my numbers into when he was assessing whether he could fund it or not. And so I took that, tweaked it, made it suitable for me. So I've kept all of that stuff. But ultimately the numbers work. If the numbers work, I'll develop anywhere. But yeah.
What's from a first time developer? I know yours is going to be slightly different, but what's the process for you searching for sites? Is it literally your budget, kind of where you can afford, go on realestate.com, call pest all the agents, do all that type of stuff, and then just see what works? Like, what's the process to find the site?
I developed very, very strong relationships with key agents in the areas that I was working in. The one in Hurstville landed in my lap. That was just happenstance. But every other site after that, I worked very closely with 2 or 3 agents, and I always gave them the project back to sell. Always.
Yeah. Well, that's funny you say that. The developers I interviewed for my book all said the same thing. It's all basically just become friends with the top agents, give it back to them for sale. They both win because they want a high price. You want a high price.
Yeah. And you just develop this great sense of loyalty. My agents were amazing. I can't fault them, honestly. Yeah.
There's an incentive. That's the thing, because they're working for you. Like it's because it's not like an investor that you're buying and trying to fight you're buying the property and keeping them on effectively.
But I was very fortunate because I found agents who were very adept at development sites. There's not a lot of agents who could do that work because it's very specialized work. Some people look at it from the outside and think, oh, it's really simple. It's actually not. There's a lot of nuance in it. There's a lot of moving parts, and it's very intricate. So I found there were 3 agents. I can see them all in my mind now. There were 3 agents down there who really knew their stuff, and they're all still down there. So I worked with them and only them. And that was it. And so I never had to look for sites. I identified the last site, but my agent helped me consolidate it. I rang him and said, mate, this is the site I want. Help me get it. And
go and get the other vendors on board.
Yeah, he did because, again, Wollongong is a town of relationships, which is why we went back to that town planner, because it's a town of relationships. And so I was fortunate in that my agent knew 2 of the vendors, having dealt with them before. And those 2 vendors knew the 4th vendor that I couldn't get a hold of. So that's just the way business works. So I never, and they would ring me and say, Jo, I've got this site. You interested or not? I would do some quick numbers. No, not interested. Or,
doesn't quite stack. Just give them some feedback so they know what's not quite working. And then what you just said though is actually applicable to like all investing. Whether you're doing your first buy and hold, it's like, okay, great. Build that relationship with the agent and then sort of understand what they specialize in. If they're purely specializing in Warnbro, for example, or Eagleby, to use it, throw some random suburbs out there, then great. If they're the king of Eagleby selling properties there, then they're probably the person that's going to get the call first off the vendor. Yeah. And maybe if you're front of mind with them, you may be able to get that pre-market deal. Look, it is very competitive these days, but if you can be that person more times.
Yeah, I think Jeff, you can throw a wider net when you're just buying a house, for instance, because you don't care as much. And like Jo said, they're not specialists as the same as the development guys are. They don't have to I don't care who I buy off what agent. Some are going to be more hard work than others, and other ones what we've worked with 50, 100 times literally tell us the price. They're like, if you get this price, it's yours. And you're like, there's actually not even a negotiation. Like they will say, this is the price you can get it for them. So, but again, it's a bit different there. But again, like you said, the promise is still the same: is get the relationship with the agents.
Yeah,
and then deals will come to you.
Yeah, and in the developing space in particular, when you get into the bigger projects, you need to have an excellent relationship with a valuer who specialises in valuations of construction deals. I had a relationship with one particular valuer down there, and he was worth his weight in gold, because I could ring him and say, mate, what's the value of this? And he'd tell me. Couple of clicks on a computer or on his calculator or whatever, he'd tell me. And then when it came up to doing the valuations for the actual construction funding, I knew what he was going to put on that piece of paper. Yeah. So I knew that my funding was guaranteed. So getting a valuer on your team is absolutely paramount.
And yeah.
Well, that's the common theme throughout this whole thing, Joe, is basically every professionally engaged needs to be really good and on your side.
Yeah. But you also need to develop that relationship with them. Yeah.
Which is hard at the start.
Yeah, definitely.
Yeah, it's hard because you need to prove yourself. You need to prove that you've got the goods and that your word is reliable.
But particularly in the development space as well, because there are so many interested developers who wouldn't. You ask them a question of, okay, what does your FISO look like on this site? And they're like, what's a FISO? And you're like, okay, well, I can't take this person as seriously now because if they can't come to me with a FISO, or like, what do the numbers look like? What's all that sort of stuff. But anyway,
I've got a saying, Jeff, that I say everyone wants to be a developer, but no one actually wants to be a developer. So what I mean by that is I want to tell people I developed this site. Look, I've done all this. But what they really want to say is I made lots of money. They don't actually want to do the development because, as Joe's mentioned, like, it's really, really hard.
It is really hard. Yeah.
Yeah. They want to tell people that they're a developer, but they don't actually want to be a developer.
Yeah. It's really hard, especially even if you're buying a DA site and you think that half the work's already done, it's still bloody hard. Especially for people who actually need to go and hire a builder. That actually adds another layer of complexity and difficulty. I could not imagine having to hire an external builder to do my projects. That would just send me crazy. I recognize how fortunate I have been having my husband who had that experience. And I recognize also that other people don't have that luxury. And, but yeah, oh my God. Yeah, it would be so much more difficult having to hire a builder as well.
People love it.
Would you say that's probably one of the key risks? Like, we've went through other ones, but they're getting the builder wrong. And I kind of alluded to at the start of the session where I said, well, how do you even choose one? And then that's when you told me your partner did it. But that's probably I'd say the highest risk one as well.
I would actually suggest to people who are thinking about going down to the development road is to try and partner up with a builder who's been there, done that, and learn from them. Absolutely learn, because there's so much to learn, so much. But also make sure your contract is watertight, absolutely watertight, and make sure that you're getting a fixed price lump sum with no escalation.
It would have been tough though during COVID, Joe, because I got out of jail a bit lucky with that, because otherwise the builder says, well, hey, it's costing us 20-30% more. Do you want this build, or we won't be able to build it? They've just
COVID was a very exceptional circumstance. Yeah.
A lot of people don't know you can do JVs with the builder themselves. So you might you had one of my staff members on, Adrian Cicchino, who actually did that. So he found the site and went to the builder, being like, do you want a piece of this?
And that's a great way to start with if you've got limited capital. Builders love that sort of stuff. Yeah.
His other creative one, he went to the landowner and said, hey, do you want a piece of this? And did it with the landowner.
And then they still get a potentially a new property out of it. There's so many different ways you can cut the land or the pie.
Oh, absolutely. Yeah. And be prepared. People need to, when you're a developer and you're getting into those bigger projects, or even a 6-unit, be prepared to be creative. If you can't afford to buy the land, do a swap. Okay, you're going to get 2 units in exchange for your land today. Or whatever the case may be. But you've got to think outside the box and be creative. And but you know what? Don't be greedy. Always leave something on the table for somebody.
That's a great way to finish. I was going to ask what anything we should have covered, but no, I think that's a perfect way to that's what I want to say. What's the best way for people to reach out to you, Jo? Because I've got your business, I've got your, but is that rental specialist? Is that the best way to reach out to you if they want more feedback on managing property Sydney? Where should people get more?
So my business is the rental specialist. I am in Sydney. I'm all over Facebook, LinkedIn, not so much Instagram. I mean, I've got a profile there, but I don't use it.
Insta.
On TikTok,
I just can't get my head around Instagram.
Not doing dances on TikTok?
Oh, God, no. God, TikTok and Instagram just do my head in. But Facebook and I'm showing my age now, of course, but Facebook and LinkedIn is where you'll find me, or my website, The Rental Specialists. Don't mix me up with some similarly named company down in Victoria. You'll find somebody who's actually not me.
I got that one. But Jo, I wanted to, I suppose, thank you for really coming on, being vulnerable here, because it must, I don't know. I did listen to a couple of podcasts or two on that you've been on, and I didn't listen to yours part 2, but you've just been absolutely vulnerable and raw and authentic about your journey and your developing. So, and to me, it's just probably open to the people that'll watch this and are watching this. They'll just get so much knowledge and wisdom, and hopefully Seb watches it, and maybe your daughter too, and they're like, wow, if you haven't talked a little bit, if there's some stuff you haven't shared with them, that's so good on you for getting out there and sharing it with us. I really appreciate you for doing that.
Yeah, thank you. I appreciate it. Look, the pain's gone now. So, I've got these lessons. People can learn and not make the same mistakes I did. So, and you know what? It's made me a better investor. It's made me a better business owner. It's made me a better property manager. So I've got a lot to be thankful for, despite the disaster.
Yeah. And Steve, thanks for coming on about a week before your number 2 child is born. You're very relaxed. I'm admiring your relaxed demeanor, but maybe I think that's a pleasing thing.
No, I'm always chill. Everyone always says that I never get angry and never get stressed, so I'm always pretty relaxed.
All right, thanks very much, Jo. Everybody, as Jo likes to take us out, let's go and buy a property. The other Jo, see you guys.
Thanks, guys.
Bye.